Today I want to talk to you guys about how do you finance your construction project. And the reality is most of you will not even ask yourself the question of how do I finance it. Instead you go into this dark hole where you say I'm going to save the money for it. And I know this topic's a little bit controversial, but I'm telling you, saving cash to fund your construction project is not the only way to do it. In fact, if you do the math, if you break things down, you're actually costing yourself a little bit of money depending on how much money you can save. Now some of you out there, you're big income earners. You can save $10,000, $20,000, $30,000 a month. Good for you, matter of fact. Actually, do you have a job opening? I'll take one. No, and all kidding aside, there are certain people out there that can save a lot of money. For the rest of us, we have to kind of nickel and dime our way there. But if you're the type of person that says, hey, I want to do this kitchen renovation, or I want to finish my basement, or I want to do a home addition, and you're about $100,000 short, let's just use that for example. And you say, hey, I can budget and I can save $2,500 a month. Well, you say, okay, great. It's going to take you about 3 years to save that money. So you say, Ryan, in 3 years, we're going to do this project. We're going to have enough money set aside for this. We're going to move forward with it. Okay, that's fantastic. I'm excited for you. But I will tell you, in 3 years from now, with very conservative inflation numbers, your project isn't going to cost $200,000. It's probably going to cost somewhere around $230,000 because unfortunately we're in a very inflationary market. And as I've told people for the last 10 years, I've been the youngest person in this industry. There are no workers coming into this industry. It's a problem. So costs inevitably are going to continue going up. So now in 3 years from now, you come to me and I say, great, you're $30,000 short. But what I could have told you, if you would have listened, I could have told you is you could have taken a second mortgage out. Oh no, a second mortgage, we don't want to get in trouble. But let's look at the numbers here. Second mortgage, even at a 12% interest rate, it's going to cost you around $1,500 a month on a 10-year note. So you say, well, that's actually going to cost me about $70,000 over the course of 10 years. Yes, but $30,000 of that, you're actually going to get right back because you're moving forward with the project right away. And I'll challenge you this. Over that course of 3 years while you were saving for the money, you could have then put another $36,000 away by saving money, putting it into a high yield interest rate account and earn more money. So your actual net benefit in this example, you would have been clear as day. You could have moved forward with the project, been happy, your family could have been happy. But the reality is you were afraid to ask the question. You were afraid to find out you actually could do this project. And so most of us go into this cocoon and hope we can save enough money to do the project. The reality is today with the cost of things going up and up and up, it becomes more and more difficult. You have to save more and more money. Understand your options, whether it's a home equity line of credit, whether it's a second mortgage. By the way, you could still refinance your first mortgage. I know it's tough for some of us that have 2 or 3% interest rates, but if the amount of money you're looking to borrow is high enough, that blended interest rate, meaning the difference between a first and a second mortgage or just one lump sum mortgage, may actually be beneficial to take one mortgage out. You have options. If you're coming to me and you say, we don't have the cash, I think you're being lazy or you're afraid to find out that you could actually fund this project.